What's up, y'all? Happy Monday. Hope you guys had a fantastic holidays, Christmas, New Year's, all that good stuff. Missed the last couple weeks, so I wanted to get on here and catch y'all up. Let's close that out before I get a copyright strike. Just vibing here, enjoying Southwest Florida. Want to get y'all excited. Let y'all know how beautiful it is here. We had an absolutely fantastic holiday season. Apologies for being a couple days late on our market updates. Had obviously Christmas, all that kind of good stuff. Had some family in town last week, so a little bit off, but we are here back to a normal schedule. Just so you guys know, at any point, if you guys need anything, even if you're not seeing stuff, my team and I are here around the clock to help you guys. We don't really, not full-time off. We were doing a little bit less than normal, but definitely, like I said, if any of you guys need anything, we are here around the clock for you guys. So let's go ahead and get into our updates this week. We're going to go ahead and catch up the last couple weeks from what we missed. Give me 1 second. Let me pull it up here. Find the Chrome browser. There we go. Perfect. Alrighty, guys. So just wanted to catch you guys up. Like I said, this is going to be the last 2 weeks. So this week that we missed, last week that we missed. Want to make sure that I go ahead and catch everybody up completely with the last couple weeks. So mortgage rates are still within the range we've been paying attention to. A lot of the other stats haven't changed too much. So we're going to go ahead and get into all of those just now. But just so you guys can see the current weather right now, 77 degrees out, 3:55 in the afternoon. We are definitely a little bit warmer this week than it was last week. Last week it was beautiful. We had like 40s, 50s at the night, and then like 60s, 70s during the day. So like absolutely no need for AC at all. I was just, keeping the house open. It was really nice. This week, a little bit warmer. Let me see if I can find you guys the weekly real quick. Show y'all a little bit in the past as well. Can I do that or no? Maybe not. Anyways, 77 degrees today. This week is going to be a little bit warmer than, like I mentioned, last week. Tomorrow's going to be a high of 80. Thursday's going to be a high of 84. Friday, high of 85. And then next week, at the beginning of the week, we're going to get another cold front, get back into that real nice weather that we look forward to here in Southwest Florida. Definitely, personally, I'd rather have it be hot than be super cold. I'd rather, turn on some AC than be shoveling out snow from the driveway. So, there's definitely trade-offs. Let's go ahead and get into the mortgage rates. So we're definitely dropping a little bit from the last week that I had done the update. We were at about 6.24%, 6.29%. Right now, the average is about 6.19%. So that's definitely, as we can see in this chart, it's been continually decreasing. They're talking about doing a couple more rate drops at the Fed this year. That should continue to have us on this nice downward trajectory. We are going to want to pay attention to that. Sometimes the rates can be pre-priced in, like maybe they're already expecting rate drops, which is why they're hanging out in this low range. But there's also, the potential we get those rate drops and these continue to drop down further. As we mention every single week, mortgage rates are essentially tracking with the U.S. 10-year bond. So this is really essentially where everything kind of originates from, I guess. So the bank's mindset here is if they can just go ahead and buy a government bond and return 4.15%, why would they take a risk on, a mortgage at that same exact rate? So that's why you can't get a mortgage for 4-5%. They're adding on 1%, 1.5%, whatever the case is, to essentially take that risk to actually lend to borrowers on houses. Like I said, it's more of a risk than just putting money into the government directly. So as we start to see these bond prices drop as interest rates get lower. If we look over time back in 2020, when interest rates dropped really, really low, the bond market, the bond returns dropped really low as well. So probably never going to see this range again, but I'm thinking we could probably get back into this 2-3% range, which is going to give the mortgage rates, like I said, probably a 1 to 1.5% spread there. So if we're looking at 2 to 3% on the bond rates, that would put us probably between 4 to 5% on the actual mortgage rates, depending upon exactly where these bond rates end. But that's kind of the psychology there. Basically, throw your money in a safe asset, give a loan against the house. Obviously, giving a loan to a person on an asset is going to be a little bit riskier than just putting your money in the government, which has, years and years and years of history of giving returns. So that is basically the mindset there, but we're watching this little channel. We've been continuing on this nice downtrend, so at least based on my technical analysis, we should continue that through the rest of the year, but we're watching this range, making sure we reject off of this top line, make sure we recover on this green line. Otherwise, we're going to have rates just, completely bottom out and plummet like we did in 2020. Or if it goes past this red resistance line up here, then we might start to see rates go back up, which I don't think anybody really wants. Moving along to our stats for the week. So I'm going to go ahead and touch base on the last 2 weeks of stats. We weren't here. We missed a couple weeks. So we had December 27th, the week of December 27th, the median sales price was only $325,000. Chances are that's due to just being Christmas week. Nobody's really setting closing dates and anything like that on Christmas week. I'm sure that, the people who were closing there, probably people who do real estate as their business, investors, wholesalers, those kind of sales. Maybe there was some, sellers that really needed to get out before the holidays or something like that they wanted to close during that week. But for the most part, regular buyers, they're, enjoying time with their family, doing regular stuff. They weren't, probably setting their closing date for that week. So I'm sure as we go into the closed sales, the listings, all that kind of stuff, we're going to see a little bit of a drop from last week. This week, we've seen a slight recovery up to 340,000. So we're definitely going to want to watch this over the next couple weeks. As we see here last year, it's pretty consistent right after the holidays. We get a tiny drop, and then throughout the rest of the season, we should have fairly good activity up until around the end of April. And then in the summertime, we start to get that drop, as you guys can see here. But watching this range, we really want to see if, our median sales price continues to slip, trend down, or if we're going to start to see some recovering up. We've definitely the last couple weeks seen, decently higher median sales price just due to the fact of some second home selling, pool houses, golf access houses just being seasoned. A lot of snowbirds are in the area wanting to, get their Southwest Florida house. They maybe work their whole life. They've got cash, whatever the case is. They're, in that higher price point, wanting to, get the pool, get the golf access, get all that kind of good stuff. Closed sales, like I mentioned, just with the median sales price, we dropped a little bit last week. That's expected with the holiday season. We're seeing a decent recovery this week to 174. However, it's definitely on the lower side of the range that we've been seeing over the last 4 to 6 months. So this is definitely something that we're going to want to keep an eye on. We want to make sure that this closed sales goes back up into the range that we've been looking at instead of going, continuing to trend down. Otherwise, that's going to indicate continuation of the buyer's markets, less buyers than there are sellers, lower prices on houses, more inventory available, buyers getting better deals. Definitely would be a good market to be a buyer at that point. However, if you're a seller, you definitely got to position yourself the right way. Sold price per square foot, very similar as everything else. We are going to want to take a look. Last week was 201 square foot on average. This week recovered a little bit, but we want to make sure that we're paying attention to this bottom line. If we start to get some lows down in a new range, that signifies to me median sales price and price per square foot is probably going to continue to trend slightly down for the rest of the year. Percent of list price received, this is going to be the percentage of the latest listing price that was received, 95.5%. So that actually to me shows that sellers are definitely pricing a little bit more aggressively, at least with their last listing price. They're more within the range of market value. As you guys can see, a couple weeks ago, we dropped all the way down to 94.5%, and we're even slightly above the 94.9% and the 95% of last week. Last week was 96, this week's 95.5. So definitely discounts to be had. This is showing that, if the house is listed at $300,000, probably going to get about $15,000 off on average, that 5% discount. This on percent of original price received, this is going to be the percent of the original price. So if the house was originally listed at $330, now it's listed at $300, and you get $285 for it, that would be that 5% discount in the listing price, and then the percentage off the original price received will be whatever that is. I don't have the mental math there, but whatever the $330 to $285 would have been, that's going to be the percent of original price received. So this definitely signifies to me this is trending up. Sellers are becoming a little bit more realistic in this market. They're definitely looking for positioning themselves more on the money at the start than, trying to recover in the future with drops and that kind of thing. Percentage cash sales, this is going to be an interesting one. So last week actually went down. So probably the snowbirds are, they took a week off a little bit, just like everybody else. Only 30% of cash sales that week, but it rebounded right back to 40%. As you guys can see from last year in our season, typically about 40-ish% of sales are going to be cash. Like I had mentioned earlier, a lot of snowbirds, retirees, people that, work their whole life, save their money, they've got cash just ready to, come down. Maybe they paid off their mortgage on their house up north, or, just invested, whatever, but they've got cash. They're just like, hey, I want my golf access house. I want my pool house. I want to just, enjoy some Southwest Florida living, get out of the cold. And that's definitely a lot of these sales that we're having right now. Days on market for closed, we're definitely trending down a little bit, so that probably plays into the original price and listing price being a little bit more on the money. If you're positioning yourself better at the start, you're going to get more activity right away, more showings, more offers, and a quicker under contract time. This is one I really do want to check out in a second. New listings, we're going to check out now, 325. So we got a pretty decent drop last week, and then we're going to have back up to 325 this week. We're really going to want to pay attention to this in the next couple of weeks to see if we get a spike of new listings within the next week. So next week, if we see a spike, the week after we see a spike, that signifies to me we could potentially be entering another, seller's market if the listings are outpacing the buyers, which it could. If we get up to 700 new listings and we're only having, 174 sales, that's not a very good ratio at all. New pending sales we want to check out as well. So this is the new contracts that are entered. This is still pretty low, 159, 189. So if we're looking at just strictly the new listings, that's not a terrible, clip, but it's still about only half of the listings that are going active are going pending every single week. So that still, signifies a higher percentage of listings than there are buyers. Active inventory right now, this is probably trending. It's actually trending back down. Interesting. So maybe there were some expired listings at the beginning of the year, which took away some of the inventory. Let me see if I can find that in here. Unsold listings. Here we go. Yes. So 343 were took off the market at the beginning of the year. So that's probably why we saw this, active inventory go down a slight bit this week. But we're going to want to keep track of that over the next couple weeks with the way that we're seeing the stats, less pendings, less closed, and more listings. Chances are this is going to do, something similar like last year, but we're going to want to keep an eye on that. Hopefully we start to get some more buyers enter the market. Rates are a little bit lower and we can prevent that second, downturn a little bit. General supply of inventory. down a tiny bit, but as you can see last week, that went up to 60 weeks on the market. And as you guys can see from the beginning of last year, like if you were a buyer in the market at the beginning of last year, you had 60 weeks of inventory, so you just had tons and tons and tons of options, a lot of probably overpriced houses that really weren't going to sell, but still lots of people that needed to sell, lots of people who wanted to sell, and lots of options to choose from. NAR balanced range is anywhere between like 20 and 28 weeks of inventory. Right now we're at 40, so we're definitely outside of that, and we have been outside of that for essentially the whole last year. This is where if we continue to stay outside of here, I'm seeing my prediction for the year is going to, at least for the next couple months, be a little bit more of a slow bleed in terms of listings and buyers. It just seems like listings are outpacing the number of buyers that are on the market right now. So we definitely, need to pay attention to that, and, just figure out where things are going to go. So if we start to see a shift of buyers re-entering the market, we're starting to see some more pending, some solds, mortgage rates continue to drop. That's going to be great for sellers. But at the look of things right now, it definitely seems like potentially another year of, not pain, but definitely a little bit of pain. Total pending inventory is still up. So like a lot of these, sales that should be taking place are not taking place. So that's where, like we had mentioned the last time we did an update, maybe there's short sales, maybe there's, investors that can't close, there's sale contingencies, there's things like that, but there's definitely a lot of pending inventory that hasn't closed. So the amount of pending inventory is a decent sign, but the fact that we're getting, lots of new listings and not as many closed and pending sales definitely, signifies to me that we're going to be having an abundance of listings at the beginning of this year. But we'll be back next week for the next update. Check the newest pending sales, check the newest inventory, check all that good stuff to see how everything kind of settles out and see what this year is looking like. Like I said at the beginning, or I didn't say it, but at the beginning of the year, definitely, I think I did briefly mention it, but a lot of the we definitely see a drop during Christmas week. So over the next couple weeks are going to really give us a clear idea of where things are going to be headed. So if you guys have any questions whatsoever about any of these stats, what they mean for you on your buying and selling journey, feel free to reach out to us. We'll have a customized little, quick 10-15 minute chat. Go over your wants, needs, goals, timeline, all that good stuff. I can answer any questions you guys have about the area, things to do, house prices, any of these stats that we went over, all that good stuff. I've been born and raised here in Cape Coral for my whole life, so anything that you guys need to know, I went to school here, I grew up here, born and raised here, like I said, so there's absolutely nothing that you guys need that we can't take care of for you. Whatever point you guys are at in your journey, feel free to reach out to us. We're just looking to connect, just build that relationship with you guys. And we're going to be here, whether you guys end up buying or not. So we just want to be that source of information for you guys to make things as easy as possible if and when you guys do make an eventual decision to get down here. So hope you guys all enjoyed that market update. We're going to get back into a good routine of things. This was a, kind of 2-week mixed update at the beginning of the year. I'm probably going to sit down here soon and really, analyze everything the last year, the beginning of the year, come out with an actual, better edited video of, hey, 2026 outlook. So keep your eyes peeled for that as well. But like I said, if you guys have any questions whatsoever about anything, any of these stats, the market in general, any of the homes you've been seeing, my team and I are here around the clock to help you. All of our contact information can be found in the description below. Again, thank you guys all for watching. Be sure to stay tuned later in the week for some more home tours, educational content, next week's market update, all that good stuff. So y'all enjoy the rest of your Monday, and I'll see you next week.